Welcome to the Hurst Trading Room. This is our video update for the 27th of May 2013. It's been an interesting week in the markets because for the past 3 or 4 weeks we've been simply monitoring our open positions, which, as you know, have been profitable positions, and they've been gradually working their way further and further into profitable positions. But this week everything changed. There were turns in the market, and the cycles that are moving the markets all turned, and occasionally that will happen. Very often you find that cycles across many different markets all tend to turn at the same time, and that's what happened in this past week. So let's take a look at the markets. Before we do, make sure that you have read and understood these disclaimers. First of all, I now have an open position in the S&P 500, and as discussed in last week's video, the open position in the S&P 500 was a slightly questionable or slightly debatable open position. If you're trading along with me, you might very well have made the decision not to enter into this position. It wasn't an absolute dead cert, this trading opportunity, and it continues to be a little bit questionable, but as you can see, we did enter into the position, and I did so over here. That was my entry price, and of course the reason it is slightly displaced from the FLD, which is over there, is because I didn't enter within the previous day's trading range. I entered just below the low of the previous day. We effected our entry on Thursday as the market came down to this trough over here. And a little later I'm going to discuss what that trough actually is. You can see that in the default analysis that Sentient Trader is now presenting, it's showing a very big nest of lows. I don't believe that that is absolutely correct, and so a little later I'm going to look at the alternate analysis, which in fact makes this trough a 40-day cycle trough. And it is very possible that that 40-day cycle trough has already occurred, and in fact it might have occurred last week Thursday. Of course, that's the risk that we take when we enter a trade. And as mentioned in last week's video, the markets have been really stretched by a dominant cycle and potentially are in the grips of a pseudo trend. We don't know that for certain yet. A pseudo trend is something that is quite difficult to recognize in its early stages, and if this is going to turn out, with the benefit of retrospect, to be a pseudo trend, then it probably has a good deal further upwards to go. And for those reasons, of course, as I discussed last week, you might not have entered into a short position because you might have considered it premature. I have entered into a short position to demonstrate really how trading the FLD trading strategy works, and even when you have some analysis uncertainty, you will enter into positions. Of course, the way in which I handle that analysis uncertainty is either to enter into only a position in the S&P 500 as opposed to S&P 500 and the NASDAQ, for instance, or to simply enter into a much smaller position, which is what I've done here. I've entered into a smaller position. I'm taking much lower risk. I am resting easy, even if it turns out that the dominant cycle is still pulling the market upward strongly. I am not risking a very large percentage of my portfolio, so I'm not too worried about it. So a little later on, when we look at the trading opportunities, the upcoming trading opportunities for the S&P 500 and for the NASDAQ, I'm going to discuss the various analysis alternatives that I believe are playing out at the moment. As you can see, this trade is currently in a small losing situation, which is nothing to worry about. What will often happen is that price will cross down below the FLD, pull back up to the FLD. I wouldn't be surprised to see it coming right back up to this FLD, and at that point, of course, it might resolve to the downside, which is what we're hoping it will do. Or it might turn out that this is the 40-day cycle trough over here, and if that is the 40-day cycle trough, then of course we would look at a move up to an even higher high following that 40-day cycle trough. So this is our current position in the S&P 500. We're short. We're in a slightly losing position. You can see as I speak, we're losing about $25 on each of our 3 trades, $75 altogether. Not a disaster, but we, of course, are going to be monitoring it carefully and seeing how the position unfolds. We have exactly the same situation in the NASDAQ, and in fact what I decided to do was to enter into positions in both of them, but to limit the size of the position that I was taking. And here you can see the other analysis for the US markets, and this is my preferred analysis. In fact, you can see I've called it the 20-week April analysis, because the 20-week cycle trough, I believe, experienced, at least the 20-week cycle, I believe, formed a trough in April. And so that's why that trough is pinned there. And as you can see, there is a 40-day nest of lows over here. A very nice, neat nest of lows, which is often an indication that the analysis is good and is working. Not always, of course. Sometimes you'll get very neat nests of lows, purely by chance, not because the analysis happens to be particularly good. But I believe that this is the analysis that is playing out in the US markets. And so we entered into a short trade, or I entered into a short trade in the NASDAQ as well, ever so slightly below the level of the FLD, as you can see over there. There's the level of the FLD. That's our entry price. Of course, our initial stop loss is up here at the level of the prior peak. And here is our T1 target, and here is our T2 target, and they're slightly closer together than would normally be expected. That's because of our displaced entry. And so this trade is also in a slightly losing position at the moment, and it is possible that that 40-day cycle trough in fact occurred last week on Thursday. That is possible. It makes absolute sense, in which case, of course, we would expect the market to bounce up again and match its prior peak, perhaps. It might even exceed it. It might be that we are in the grips of a pseudo trend and the market is going to keep going up. If, of course, that happens, then we would be reversing position and entering into a long trade. And so I'm not worried about these trades. It's very important that when you are trading, you don't find yourself in a position where you're worrying about your trade. I'm confident in this trade. I did the right thing in terms of entering short as price came down to that FLD. It could be that the market simply has a tremendous amount of upside momentum and that the cycle pictures are going to be distorted and skewed. Well, if that's the case, I simply follow the guidelines of the FLD trading strategy and I will be okay. Of course, we will occasionally make losing trades, but they are not going to be disastrous losing trades. There will be small losing trades if that is what is happening in this market at the moment. Of course, our initial stop loss level, if I clear this, our initial stop loss level is at the level of the prior peak, but here is the level of the FLD, and as I've mentioned, it's quite possible that price will come back up to the FLD. When we discuss the next or the upcoming trading opportunities for these various markets, I'll discuss whether in fact we would reverse position and enter long at the level of the FLD. If we did that, then of course our risk is even further reduced, because we would be exiting from these trades at the level of the FLD, which for most of this week is at roughly this level over here. That must be about 30.20, 30.15, somewhere around about there. So we're not carrying very much risk on these trades. The important thing is that you use the rules for the FLD trading strategy to get into your trades. Because if you're constantly standing by the sidelines and not getting into the trades, then of course you will never experience any profits. So the important thing is we follow the rules, we get into the trades. Now, you might not have got into these trades because of the considerations of the bullish dominant cycle, the potential of a pseudo trend. So you might not have got into these trades, in which case you obviously will be simply standing by and watching the trading opportunity unfold. Or you might have chosen a slightly safer alternative, which would be to wait for this move to actually complete itself and show itself either to the upside or to the downside. So you might have an entry level set down over here. An entry level set down over here, as a matter of interest, would give you a very low reward to risk ratio, and it would probably not be a good enough entry level for you to enter into this trade, because as you can see over here is your T2 target, and so potentially your T1 target would be below your T2 target, which is of course a trade that I recommend you don't enter into. So that might be the situation that you're facing at the moment with the American markets, which is not a problem, because a missed opportunity is not a losing trade. If you decided not to enter into these short trades, then you possibly made the right decision. You certainly made the right decision for your own trading. It's very important that you trade according to your risk tolerance, to your approach to trading, to your own trading style. Okay, so that's the situation in the US markets. I am short the US markets, and we're going to wait and see what happens. See whether that dominant cycle has stopped its tremendous bullish move, in which case these trades will turn into profitable trades. If not, then we will be looking at taking small losses on these trades. We exited from our very profitable A category trading opportunity that we were in the NASDAQ. We exited last week, and here is the FLD and price interaction. Way back at the end of April, it is an A category interaction because price was bouncing out of this 20-week cycle trough, as you can see over there, and this still certainly looks to be a good analysis in the NASDAQ. And our T1 target was down here, our T2 target was over there, and our trade 3 has carried us into much greater profit. That's why we have a trade 3. If the market surprises us in the direction of our trade, which it did in the NASDAQ, then of course our trade 3 brings us in those extra profits. We would have been disappointed if we'd exited from our trade altogether at the T2 level, because we would have sat through the 2 or 3 weeks of extended upwards move, and we would have missed out on it. Fortunately, thanks to our trade 3, we didn't miss out on that move, and we exited last week as price came down below the 3-bar trailing stop, which was at that level over there. So that's our T3, or at least our exit from our trade 3. And so trade 3 brought us in a really good, nice profit on that trade. Let's take a look at the forex pairs. Let's take a look at the British pound to US dollar first. Now, the British pound to US dollar has been in a fantastically profitable short F category trading opportunity as price comes down into this 80-day cycle trough. There's the nest of lows for the 80-day cycle, and potentially that 80-day cycle in fact formed last week on Thursday. Potentially, we're not sure yet. As you can see, there have been 76 bars since this very big cycle trough over here, which is at least 18 months, might be 54 months. But as discussed previously, I tend to think of it as an 18-month cycle trough and not worry too much about the longer cycles, 54 months, 9 years, and so on. And so this has been a very profitable trading opportunity. It was a bit of a shaky start to this trade because I delayed my entry. And if you go back a few weeks, you can watch that video and see why I delayed my entry. This was our entry price over here, and so our T1 and T2 targets were taken up pretty close to each other, way up here at the 154 level, and our trade 3 has been carrying us into further profit, which is why it has earned itself the nickname of the lottery trade, because occasionally trade 3 is the one that really pulls in the big profits, and that's what's been happening here. And now we have our 3-bar trailing stop, of course, which you can see is at that level over there to protect our profits. If the market bounces up to that level, then we will exit from our trade 3. in the British pound to US dollar. Let's take a look at the euro to US dollar. The euro was also in a profitable short trading opportunity. This was a different opportunity though. This was a D category trading opportunity as price came down into the 40-day cycle trough, which now seems very likely to have formed about 10 days ago on Friday of 2 weeks ago. And so that looks very likely to be the 40-day cycle trough. And as price bounced out of that trough, we were exited from our remaining trade 3, and we were exited at this level over here, at the level of the 3-bar trailing stop. And so that's where that exit was affected. Our T1 exit was over there, our T2 exit was somewhere down here. And so you can see our trade 3 or 3-bar trailing stop exit was not much better than our T2 exit, and that's often the case with D category trades. It's unusual to see a D category trade extend much further beyond our T2 target. It does occasionally, and as you can see, the market dropped down a little bit, but then bounced up again quite quickly. And that's very characteristic of a D category trade. As discussed in last week's video, I was expecting an E category trade next, and so as you can see, I entered into the E category trade last week, which is struggling to get going really. We're in a small loss at the moment for that E category trade, but it's still looking good for an E category trade, and so I am still optimistic, and I do still expect to make some money out of this E category trade. Now, the euro to US dollar is providing a very good, very interesting example of a situation where one should consider displacing an FLD, which is an advanced topic which we cover in Module 5 of the FLD trading strategy. And so when we look at the next trading opportunities and what to look for next in these markets, I'm going to discuss that important concept of displacing the FLD, because it is something that we could have, possibly should have done in this particular trade. And so it provides a really good example of that situation. Thank you for joining me for this summary of the current trading activity in the Hurst trading room. In the full video, I take a look at the analysis in each of the instruments and identify upcoming trading opportunities in those instruments. If you are interested in viewing the full video, then please go to our Sentient Trader website, take a look at the training courses Hurst Trading Room page, where you can learn all about subscribing to the Hurst Trading Room. Thank you for your time and for your interest in Hurst cycles.